Hello and welcome to another episode of the Real Estate Investing Club, the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items to cover. First, if you like the episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running. Second, if you are a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, we created an ebook for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All we charge is our admin cost to keep the show running. So, if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says Get the ebook to grab yourself a copy today. So with that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right, and we are live with another episode of the Real Estate Investing Club. Today we have with us Eric Martel. Eric purchased his first apartment building at the ripe age of 18 years old while still at university. After graduation, in his position as an actuary, he was dismayed to see hundreds of company pension plans being rolled over into the 401k, shifting retirement risk to employees. This made him reconsider traditional beliefs about saving for retirement. Once the dot-com crash of 2001 took place, Eric started looking for ways to earn passive income and essentially stop trading time for money. He started various businesses, including a gourmet sauce company, but eventually came back to real estate investing and founded Martel Turnkey with his family. Eric now shares what he has learned so far so you can stop trading time for money as well. That is a beautiful intro, Eric. Thank you.
Thank you.
On the show.
I'm glad you read it very well. It's it took a long time to write that.
Well crafted. So yeah, thanks for hopping on. We always start out with stories here. So why don't you take us to the beginning? It sounds like 18. You have some years behind you. How'd you get started in real estate?
Yeah, 18 years, still at university, I just met a guy that was a real estate investor. I was studying in actuarial science at the time, which was like all math and more math. And and then basically this real estate investor kind of like, started talking to him. I met him through some friends. And then he was just a regular community college teacher. And he managed to by himself kind of build a 36-unit apartment building that was cash flowing, and that was kind of his kind of like retirement or financial freedom kind of fund. And he was still working in community college. And then at the time, I was not really thinking about financial freedom, early retirement. I was 18 years old, but I knew that I wanted to learn something from him, like I had something to learn. So that's why he agreed to mentor me. And that's how I ended up buying that first 8-unit apartment building just outside of Montreal. Wow. Cash flowing, no money down. I know you don't find... Also, it was not the best place in town. So,
well, yeah, I mean, first
I was a slumlord at the
down.
time. 18 years slumlord.
Yeah, that is fantastic. I love hearing stories about people who kind of like, they were going through life and they ran into another investor who kind of taught them the ropes, because I feel like learning, real estate can be extremely complicated, and learning from somebody who's already gone there is so useful for somebody just starting out like yourself. Yeah.
And I think when you're young too, like you have, what could go wrong? I was just like, I had like, when I wrote the check for the application for the mortgage, I think the check was $125 and I had like $200 in my bank account. So you're 18 years old. You don't care. What are they going to do?
Take $125.
Take the other $75.
So how'd you, it's an 8-unit apartment building. That's
Yeah.
a good first investment for sure. I mean, I started with a single family. So how'd you get that with no money down? How'd you swing that one?
Well, the best thing about these commercial properties is that you're not tied to your W-2s or your, 1099 or income. It's basically asset-based lending. So as long as the property cash flows, I mean, you can most likely find a financial institution that would be willing to lend you the funds. They may adjust the loan to value ratio. They may adjust the down payment, etc. But you can probably most likely get a loan. Obviously, then there's another big 20% that I had to come up with, which was significantly more than my $75 that I had left in my bank account. So what I had agreed was to do what's called a vendor take back or a second mortgage on from the lender. Basically, a part of it was seller financing. So he lent me the money for the other 20%.
Oh wow! You did seller financing for the down payment.
Yeah.
Wow. That's a
credit union for the first, and then the second was actually vendor take back.
Wow. I've never come across that. I've heard of it, but I've never actually done it myself. So is that something that you continue to do, into?
Oh no, I've done that only once.
Okay. I was going to say that's pretty unique.
Yeah, but I mean, it's not like now it's easier. Now I have more funds. I have more investors and all of that. So I have way more funds than I ever had. So I don't need, it's not worth it for me to really go through that. I'd rather put the money down. Yep. There's also, there's more restrictions as well that have come into play since 2008. And also you had like savings and loans also a while back. That also affected kind of the regulations around that. So it might be difficult. I think it might still be feasible, but a lot of the first lenders right now, first position lenders, they don't allow for another lender to come in second position. So you would have to find really a different kind of first lender that would agree to have somebody else come in second position. And there's so many lenders in the U.S. I'm pretty sure you can find somebody that would allow you to do that.
Yep, absolutely. Yeah. So I want to dive deeper into that 8-unit, but it's going to be a sneak peek for the Daily Deal Review. So if you guys check out his next episode, which will be the Daily Deal Review, and I believe we're going to go into that 8-unit. So let's move on from that guy. You got that first 8-unit. You learned from the college professor or community college teacher. You got that 8-unit. Where'd you go from there?
So after that, like, again, my goal was not financial freedom. So for me, it was just like one lesson I had. I tried to find other properties after that, but I was studying to be an actuary, and then I basically became an actuary, a consulting actuary for a few years, and that's what I was doing every day, like basically winding down what they call winding down defined benefit pension plan. So all these corporate pension plan that they tell you, you're going to make, we're going to guarantee 2% of final salary times your years of service and all of that. So basically destroying these plans and converting them into 401k plans, basically.
Interesting.
And and then then it really shifts the risk. That's what you were saying in the intro. It shifts the risk now from the employer to the employee, because the employee can only buy the pension that they can afford with their 401k savings.
Interesting.
So that's, and this is why I kind of like started speaking up more recently about the financial crisis that's coming up. And we're seeing some signs of that right now, because these pension plans are gone. The 401ks are basically what people rely on. And people didn't save enough. And they're looking at alternatives for converting these savings into some kind of stream of income. And there's a lot of marketing that's being put to them for annuities, for all kinds of other products, but nothing about investing in rental properties. And that's why I decided to kind of speak up a little bit more about that and give people an alternative.
Absolutely. I mean, I throw this number around a lot. It's on Google if you Google it, but I don't know how much science is behind it, but the 90% is the statistic that's thrown out there. For all the millionaires in the world, 90% of them made their wealth in real estate. So if that is an actual statistic, which would make sense because, I mean, to me, being in the field, but there's a lot of credence to shifting your retirement focus to real estate versus other assets. And I did, when I was in corporate, I had a 401k. I liquidated the entire thing in order to get into real estate. So I don't know a lot about 401ks, to be honest. So what is, what is a 401k in terms of how does it benefit? You said it shifts the risks onto the employee. So why would somebody not want to, go in and put more money into a 401k?
So I think 401k is a great tool. It's a great tool for savings. And of course, if your employer is going to do contribution matching, if you're going to put that $10,000 in the 401k and then your employer is going to match it, then absolutely you should save in your 401k. It's a great way to, to save money that's kind of tax deferred for retirement. But this is kind of like the end of the thinking process here, because people are saving and saving and saving. And they're being told that, hey, you want to save $1, $2, $3 million in order to retire comfortably. But so they just blindly go, not thinking about, okay, now I have $2 million and it's time for me to retire. Okay, then what? What do I do? So then they're going to go back to their because right now their 401k is stored with a financial institution. So the financial institution is going to say, well, you could convert it into an annuity. So, but the payout on these annuities, you put like $1 million in an annuity, you're going to get, like, if you have like survivorship, if you have inflation protection and stuff like that, you're going to have a payout of 3% or something like that. So, I mean, this is very, very low, so and then there's other ways of converting that into a stream of income, but very few people are talking about rentals as a way of creating that stream of income. So if you buy this property, one of the properties that we sell, and you buy it cash, let's say, the cap rate is like 9%. So you're gonna make 9% payout on your cash. So that's much more. It's 3 times basically what you would make on an annuity, and it's also something. This is a real property with a stream of income that you can easily pass on to your children. You can't pass that on your annuity to your children. When you die, everything is gone. It belongs now to the insurance company.
I actually did not know that.
Oh yeah. Unless you pay for another, what they call a rider. So you can have another rider where they can say, okay, of course they're going to reduce the amount of payout further, but you can say, okay, well, I want to make sure that at least I get back my premium, the amount that I paid into the annuity. So there's a way to do that, but most of the time you don't have that.
Right. Yeah. And so, I mean, you just use the percentage there. So you said generally on an annuity, you get 3% back as your ROI. And then you use the cap rate for real estate. 9%. I mean, if you're buying Turkey, you cannot buy 9% here in Seattle, but
no, that's right. No. So we do out the state, obviously we do in Cleveland and Memphis. And then if you do financing, your cash on cash return is about 15%. So positive cash flow, 15% on your down payment. And that's if you don't do financing, you're about 9-10%. So it's still pretty good.
Yeah, absolutely. And so I want to shift focus to kind of the investing that you're doing now. It sounds like you guys are doing turnkey investments. What you provide is kind of a product for people to buy from you. You've already mentioned a few markets. What are the markets that you guys are excited about? You mentioned Cleveland, which is funny because I just bought. Well, I'm in the process of buying a property out there in Cleveland. So what are the markets that you're pretty excited about out there?
Yeah. So when we looked at markets, we really thought about it kind of strategically and said, well, this is what we want. We want to have passive income. We want positive cash flow. We want to, be kind of like a little bit more the bigger fish in a smaller pond kind of thing, so that we can, easily kind of maneuver and negotiate in the market. So we came up with some criteria: make sure that the state is landlord friendly, make sure that there's the MSA or the city that we're in is actually has sustainable growth. If you have explosive growth, what happens is that the whole real estate market kind of goes crazy, goes into, and then the prices skyrocket and all of that. And it's very hard. You end up with a hot market and you can't buy into it, and there's no cash flow. Yeah. So, sustainable growth, low unemployment, business diversification, and all of that. And I actually share a lot, all the data that I've captured for all the MSAs. I actually share that on a website called investor-list.com. So that has all the data for all the MSAs that I captured.
Oh, cool.
So when we look,
I will for people listening, I'll put that URL in the show notes. So click the little more in the description, pop it down. That link will be in there, so you can click right through. I'm sorry, Eric, keep going.
Yep. No. So then we looked at these markets. Then we kind of like dove down a little bit more, and we had selected about 4 or 5 markets that we were really keen on, really interested in. So Memphis was one of them, Cleveland, with St. Louis, Indianapolis, etc. So we looked at Pittsburgh was also another one in Pennsylvania, and then we're living in California. So we said, well, if we're going to do these kinds of projects out of state, we need to build a team. So that's when we started contacting people like realtors, property managers, and all of that, and see how we could build a team for that would be local. And then we had a very good response in that Memphis and Cleveland. We had an excellent response. And then the realtor was phenomenal, brought in the whole team together and managed it. Same thing in Cleveland. We had actually only a couple of realtors that were really responsive. That's something that was very interesting too, because my son, actually, who's a business owner as well, co-owner and founder, he's the one who did all the calling and stuff like that and contacting. He contacted like 100 realtors. Only like 3% of them, like 2% of them actually called back within a reasonable amount of time. So it's pretty easy to weed realtors out.
Do you call back? That is step number one.
Well, yeah, exactly. Because, being out of state, we want to have very good communication with somebody. So if somebody is not responding, we don't want to wait 3-4 days for a response back on a renovation or anything like that. We want somebody that's going to respond in a reasonable amount of time. So we found these, and then we built a team, and we built we bought our first property in Memphis.
Okay.
So we renovated it. Everything was on budget, on time, and it was like, wow, this is fantastic. And then let's do 2 more. And then that's kind of how we got going. Initially, our goal was to build a passive income portfolio just for ourselves. We never intended to build a turnkey rental company provider. But as we were building this, people heard what we were doing. And then, so we thought, well, maybe this could be a good opportunity for us to build something and help people kind of build their own portfolio. Because we had a lot of opportunities that were coming to us, and we couldn't do them fast enough. So we were just picking the ones that we were interested in. But as more people were interested, then we said, okay, well, maybe we can do this and then sell 2, keep 2, etc., and kind of build that way.
I love it.
Yeah.
So, doing all of this, in state, flipping a house and doing all that work in state is hard enough. Out of state, that there is a whole other layer that is added to the equation. So how do you go about, it sounds like you buy value add properties. You don't do, they're not new construction or anything like that. So how do you go about, 1, managing the flip, and then 2, managing the rental once it's already stabilized? Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Yeah, so I mean, you have to have people that are responsible, accountable, and they communicate. So you have to trust them. You have to, and build a team and let them know that, hey, you know what, we're going to be working. If this thing works out, we're going to be doing a lot of these properties over the next few years. And in fact, the contractor that we did our first house in Memphis. It's the same contractor that we're using today on our apartment buildings and the other properties that we're doing. So, we've kept him busy over the years, and so I think that's worked out. But he's self-managed, and we tell him this is what we want to do, and do this house. He knows exactly what tile to use, what color to use, what toilet, what counter, all this stuff, because it's the same things we do it all the time. He just present a quote and he sticks to the quote and moves on. He sends us pictures and I know it sounds easy, but but at the beginning, there was a little bit of growing pain and a lot of communication, and the realtor was really critical at that point to make sure that, this is what you need to do. And there was some decisions that needed to be made, and they would send pictures or videos and texts and say, hey, what do you want to do with this? Hey, we found this and stuff like that. Made decision to kind of make sure that we were aligned with what we wanted to do with the property. Yep. So that's the key.
Yep. So the key that I pulled out of that is you have to build a good team. You have to select good team members. And based on what you said earlier, you called 100 people. So how my question was going to be, how did you go about creating this team? It sounds like you just went through and you just hit the pavement and just kept reaching out to people until you found somebody that was, had the response that you were looking for.
Yeah, because you're looking for a realtor that wants to work with investors. And not many of them know they want to do that. Not many of them know what we're looking for as investor. They don't know what is a great opportunity for a rental. They don't know any of that stuff. So they focus on the retail market because you want a house in this neighborhood with this blah blah blah, and then there you go. This is a house for you, and see you in 20 years or something like that for the next house. Dealing with investors is a little bit more challenging. You have to know your numbers a little bit, and there's a little bit more projection in terms of estimating the after repair value, the renovation, kind of like a ballpark estimate of the renovation and the rent as well. So, so it was there's not many people that do that. But once you find them, it's a good deal, and then you tweak. Often people they tend to kind of like, okay, well, this guy doesn't work out, and then you just throw that contractor or something like that in the bin and say, okay, we'll move on.
Wasn't perfect. Get rid of it.
It was exactly right. So, you want to work a little bit. So you're also responsible for communicating to your team and letting them know what you expect. Not just discarding them. I mean, they're people. They're trying to build the business as well, and it's the relationship is two ways. I'm not saying if the problems don't get solved, I'm not saying keep them forever, but try to work things out and explain exactly what you're looking for, where things are not working out, and what needs to be solved in terms of problems.
Yep. No, absolutely. I'm a big believer in giving people a second chance, in the sense that you really do need to communicate what it is that you need and what it is that needs to be done in order for the partnership to work out.
Yeah, it's tough because it's tough telling somebody, another adult, that you didn't do a good job here, and you need to fix it. And I don't want to pay for that. And yeah, it's tough. But yeah, you have to do it, and then just say move. And then after that, you move on. You just okay. Well, if he does a good job the next time, that we'll keep going.
Yep, easy to forgive. I love that.
Yeah.
So we have blown through our 15 minutes. So I got to push us on into the quick question round.
Okay.
Which means we start with books. I'm a big bookie. I always ask, what is your favorite book? 2 book recommendations, actually. One for real estate and one for general life wisdom.
So for the real estate, it was I think it's part of the what's that? Rich Dad Poor Dad. It's not the Rich Dad Poor Dad book. That's boring. But he has another one that's Real Estate Loophole. It's one of the guy that's kind of like a partner or part of that system, and the book looks very similar. So Real Estate Loopholes. Fantastic resource for reference. It tells you about how to structure the insurance, how to structure your LLC, taxes, all that kind of stuff. So that's it's a very solid book. So I really appreciate that. The one that's not non-real estate related. Oh, actually, for a real estate book, you also want my book.
There you go. I was going to say, you got to plug yourself.
Excellent book. But for the non-real estate related book, one of them that I like is "What Got You Here Won't Get You There." I think this is always a very good one, because it's about really mind shift, right? So you have to, if you're going to go into this business of real estate and achieve financial freedom, whatever you learn as a full-time employee, you're going to have to shift from that mindset. So I think I thought that was pretty enlightening. 4 Hours Work Week is also another very good one. And anything on stoicism, I think, is also good.
Man, yeah. Speaking my language, stoicism. Yeah. Marcus Aurelius, Epictetus, Seneca. I mean, those are great recommendations. All right, moving on. You've already kind of mentioned this, but what is an area in the U.S. that you're excited to invest in?
Memphis and Cleveland. So these are solid market. And actually, when we invested in these markets, we invested for cash flow. Right. So, and what we're seeing right now over the years is that these, not only are we getting like 15% cash on cash return on, financed property, we're also seeing an appreciation of 8% year over year on these buildings. It's just, it's unbelievable. So, so we're very excited with the markets there.
All right. Going on, this one is for your younger self. So if you could go back to the Eric who was 18 years old, you just got your first, let's say when you just met that professor, go up to him and shake his hand, look him in the eye, give him one piece of advice moving forward.
I would say focus on real estate. This is the path, and then really continue to look for more rental properties, more investment, and all of that. At the time, I didn't have any money. So I said, I didn't have money going in, but then I really didn't have any money. And then I thought, okay, well, this is kind of like lucky. And again, I was not in that mindset of financial freedom or, so yeah, I would say, tell myself, focus on that and make it happen and find funds, find this. Yeah.
Perfect. Next question is opportunity for you to brag a little bit. So flex your muscles. Tell us what
I never do that.
What are you amazing at? What's your superpower?
Superpower. I think it's numbers. I would say this is numbers. I mean, it always starts with me with numbers. Every business that I started, I always start a spreadsheet and start looking at the numbers and see if it's worth my while to get it done. We've done a number of business, and I think my other hidden superpower is my family. So that's the other thing. I mean, I wouldn't be where I am today without my sons and Aunt Juan that has my older son that has really kind of like got this started and moved forward. And my wife is also in the business. The whole family is in this business. So this is really my hidden strength. Because it's tough when you're working full time. One of your biggest constraints in terms of resources is your time.
Mm-hmm.
So I had I was lucky enough to have a very driven son, two sons actually. One was very driven. The other one was more focused on to be a real estate agent at the time. So he was not so involved, but we got started in real estate together as well. But yeah, now he's in the business as well. But so that's the thing. I think it's without my family, I would probably still be working like full time, and
Perfect. No, I
really
love
appreciate that.
I love hearing family success stories. That's always endearing to me. All right. And last question. This one's for the guests. You've given us plenty of advice to mull over. I'm sure people want to reach out. What's the best way for them to get in contact with you?
So the best way on my website is marteleric.com. So that's my personal website. And in there, you can see all my social media, my book, and then everything else. On Facebook, eric.martel.ca, and on Instagram, e_Martel, Martel.
Perfect. And I will put those links in the show notes. So if you click the little more in the description, pop down the full thing, you'll see the links there. Click through, say hi to Eric. So Eric, thank you again for hopping on the show.
Thank you. My pleasure.
Absolutely. And for everybody who's here with us today, thank you guys for hopping on. We couldn't do this without you. In fact, you are the reason that we do this. So thank you for being here. Again, the best way to support the show is just to subscribe, like, and share this episode with your friends and family. Other than that, I hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode and were able to pull some actionable advice that you can go home with and apply to your own investing business. Before you go, I have a gift for you. If you're a new investor looking to get started or an established investor looking to take your business to the next level, I've created an ebook just for you available on the website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find a deal that's actually a deal, how to finance that deal with little to no money down, and how to exit a deal for maximum value. And if you get the ebook today, I'm going to bury you in bonuses, 7 of them to be exact. First, you'll get the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating real wealth in real estate. Then you'll get the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools and systems and even the vendors we use to grow our business. After that, you will get the top 100 best performing keywords pack, which will give you the exact keywords we use to target leads online and generate leads without having to lift a finger. Next, you'll get the contracts bundle for wholesaling and renting real estate, which will give you access to all of the contracts we use in the field to execute all types of transactions. After that, you'll get the Investor's Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automagically from those calculations. Next up, we'll give you the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And finally, you will get the Wholesaler's Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. I know that is a ton of things to say. I'm glad you were able to stick with it. So you'll get both the ebook and all of those 7 free bonuses when you download the ebook today. All we charge is the admin cost to run the show. So if you are interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page and take advantage of that deal. With that housekeeping item covered, I hope you have an absolutely fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.